Hello friends, this is Professor Amarjeet Kaur, Professor of Accounting and Business Communication at the Department of Management, Gurugram University, Gurugram. I have been working from last more than 3 decades now, and it's my privilege that I am here with you to talk on scope of financial services. This is the part 2 which I shall be discussing. In the part 1, in the past we have talked about financial services which are fund based, and in this session we are going to talk about non fund based, means other way, fee based services. So to understand the topic, let's understand the financial services sector. So it's a primary sector driving the nation's economy, stability, bringing stabilities, bringing growth in any country, because it provides free flow of capital, free flow of liquidity, it ensures liquidity in the marketplace, and it includes various financial entities, be it banks, be it investment houses, lenders, financial companies, real estate brokers, insurance companies, whatnot. So there are so many players which are working in the financial service sector, and the importance of this financial service sector is lies in because it facilitates the free flow of capital and liquidity in the marketplace. It helps managing risk, it helps serving as a key driver of nation's economy. That is the importance of financial service sector, and it is gaining momentum by every single passing day, because we are getting very complex financial instruments where intervention of financial intermediation or where intermediary is required. Financial services are required because financial markets, derivatives, options, they are becoming complex. Now people are actually pledging on weather, or pledging on carbons, or pledging on anything for that matter. Even events show possibility of the events to occur or not, even matches, etc. So the scope is really getting wider. So that is why the financial service sector is also growing, because the financial sector itself is growing. After digitization, the growth is become momentous across the world, especially in India. Post COVID era, we all are witnessing a very fierce competition in financial service sector, which means the sector is growing, right? So the question comes in, what comes in the scope of financial services broadly. So as I said in the beginning itself, financial services can be divided broadly into two parts: fund based services and non fund based services. And in this particular session we would be talking about non fund services, because fund based services has been discussed in the past in part 1 of this session of this topic. So friends, non fund based financial services, what they are? So customers are not satisfied with mere provision of finance nowadays. They are looking for financial service companies or financial intermediaries which provide them services on the basis of non-fund activities also. Just there's no any requirement, only the requirement of funds itself. There's a requirement for services as well. So such services are known as fee-based services, and these include many of them, which I am going to discuss one by one. So to name a few of the non-fund based services, we have securitization, we have merchant banking, we have credit rating, we have loan syndication. Number 5 is project advisory. Number 6 is business opportunity related services. Number 7 is services to foreign companies and NRIs. Number 8 is portfolio management. Number 9 is merger and acquisition. Number 10 is capital restructuring. Number 11 is debenture trusteeship. Number 12 is custodial services, and number 13, the last service I would like to talk, is stock broking. So I shall be explaining them one by one now. Securitization. What is securitization? Securitization is basically a concept where those assets which are not liquid, they are converted into liquid assets. What does it mean? It seems to be a complex statement as I made. So securitization is basically the the loans, for example, banks issued housing loans to hundred and thousand of people, and that loan becomes assets in the books of accounts of a bank, which means those are the assets for bank and liability for individuals who have taken housing loan. It is true for car, it is true for credit card use, right? All the three example. So what bank can do, because bank has such a huge money which is stuck in those loans in the form of course long term assets, if the loans are for more than 5 years, which bank will be getting gradually, but bank's business and liquidity both are affected, because it cannot expand its business because it doesn't have the liquidity, because the amount of funds it had earlier, they have been already extended in the form of loans, and loans are assets, they will be received in future. So securitization is a concept where these loans are bundled as financial assets which are marketable, because otherwise loan is not marketable, you cannot sell the loan in the open market. So you have to redesign, you have to put these loans in a security in the form of a financial security which can be traded in the market to make it flexible, to make it marketable security, and that's how bank will buy securitization, bank will get funding, right? This is what is the securitization. So this is a fund, it is a non-fund based, it is a fee based service, right? Whosoever is doing securitization for you means for a bank, is another financial institution which is doing the securitization process for you as a bank or as a lending institution, and this is a fee based service, right? This is the first one. The second is merchant banking. Merchant banking is a very vast area. There are hundred and types of more than, there are so many types of services which are provided under merchant banking. Let's say you are an importer exporter, you are issuing letter of credits, so even the letter of credit is going to be taken care under the merchant banking service. Your letter of credit, LC issue of LC, you need a banker to issue an LC to undertake that in case person fails to pay you, or you fails to pay somebody, if you are buying, then LC will be owned by the bank, and for that, for this particular service which is undertaking the LC or issuing an LC, letter of credit, letter of credit is issued by the bank to the seller. So and buyer is requesting the bank to issue the letter of credit. So the buyer in case buyer fails to pay, bank has an obligation to pay, depending on what kind of LC. There are so many different types of letter of credits, their terms and conditions are different, but nevertheless broadly the bank is supposed to pay, right, who has undertaken to honor the LC. So this is a service which is part of the merchant banking. One example, very commonly used service of merchant banking, right? So it is fee based. So bank is charging a good amount of money from the LC issuing company for for this service, because bank is taking a huge risk, and high risk means high return to bank. So merchant banking services are very common, very important, especially very important in the case of international business, and otherwise too they are. Then credit rating, this is the third and very important non-fund based financial service. What does it mean? If a company has to issue debentures, it cannot issue bonds or debenture without seeking a credit rating from the credit rating agency. We have ICRA, ARA, we have so many credit rating agencies in the country. What do? They rate, they give certificate of credit worthiness of a company, and there are so many categories: A plus, B plus, triple B, C, like that. So higher the rank, higher the rating, which is AA, right? So it gives a more confidence amongst the future or the prospective investors who are going to buy debentures, bonds or shares for that matter. In journal too, it is helpful. It creates a very positive uh, vibe amongst the future or the current investors about a particular company basis on the rating given by the credit rating agencies. So this is also a service for which the credit rating agency is charging a fees. Nowadays we have credit reports for all of us as an individual. If I take a loan from Bajaj Finance or Tata Capital, I have, my credit rating will get changed. If I pay it on time, my credit rating will go up. If my credit score, right? If I do not pay the EMI, my credit score will go down, right? My credit worthiness is decided, is being used by the financial institutions to give me loan or my future loans, right? So this is about an individual, but credit rating agencies are actually primarily, what they are doing, they are giving rating to the institutions as well. That's how it started. Gradually over time, the individuals are taken as in the part of these services, but earlier, originally, when it started in India, it was about not individual, it was about institutions or the companies. They were rated by these financial bodies. Loan syndication, it is basically, loan syndication is if I require a huge amount of loan. Let's say my investment in an hydro plant is 10,000 crore, and you approached a one bank, they found your proposal very lucrative, they see there's a great business plan, the cash flow is going to happen, good amount of cash flow is expected. So they agree to pay, but they have their limit. They do not want to take such a high risk. So they will tell you that, okay, we will provide you 2,500 crore, rest for the 7,500 crore, which is another requirement, you may approach another bank, another institution, etc. and so on. So here 2, 3, 4 financial institutions gradually, after coordination, they come together and they syndicate. They collectively offer loan to the needy, to the company which requires it. So this is what is known as loan syndication service, and for that a fees is being charged, right? Then we have the fifth one, project advisory. Here the financial institutions are advising on particular project, the cash flows expected, the profit possibilities, risk assessment for that project, all those aspects which are important about project, including the timeline of completion whichever has been submitted, that all is actually reviewed, is advised at. So this is known as project advisory. Then this is a financial service which is fund based, fee based. Non fund based means fee based. Then we have business opportunity related services. So if any business has an opportunity to acquire another business, to buy a running business, to sell off certain vertical, anything, any such opportunity is there. Here you need some outsider party independently to value those running businesses, to assess the expected cash flows, to assess the risk in that, to make a comprehensive report and provide you the data, numbers, calculation to help you decide about that business opportunity, to undertake that business opportunity or not. For a small amount, people may go by their own understanding, will go by their own experience, or a pragmatic approach can be used. But in case the risk is very high and the stakeholders would want, be it shareholders or promoters or venture capitalists, they would want that there's a technical and there's a legal advice being sought. So these are the kind of businesses which are helping in all those aspects, be it legal advice, be it technical advice, be it business advice, operational, right, finance advice, everything. So these are the services which are financial services because they are helping you to review the business opportunity and this is fee based service. This is non fund based financial service, which is very common, especially in merger acquisition. These are the services which are required. Then we have services to foreign companies and non-resident Indians, NRIs. Many banks, many insurance companies have a separate department, separate vertical segment, which is dealing with foreign companies and their requirement, or the requirement of non-resident Indians, individuals as well. I don't want to name a company. Last week only I visited an insurance company where they were trying to sell me, and they told me they are into NRI service as well. I did mention about one of the family members, and they were trying. They actually kind of expressed that they can assist in the services to the relative I mentioned about, so who is a non-resident Indians. So they have a separate branch, there is a separate vertical which deals in that. And same way, likewise, if we have companies which are based overseas in any of the country, they want to come to India, they want to invest in India, they want to buy a business in India, they want to open a bank account in India, they want to open branches. So these are the financial institutions which are providing them those services. So these are also financial services which are non-fund based, which are fee based services, right? So to foreign companies and to NRIs. Then portfolio management. So portfolio management is very, very important, is really a task nowadays. So there are individuals which have very high net worth. There are companies which have very high net worth, and it is difficult for them as a company, as an individual, to manage that portfolio which has so many different type of investments. So here comes the need for a professional service, and the service here is by the financial institution or an intermediary. In fact, an intermediary only. Intermediary helps you review your portfolio on daily basis, see which part of the investment, which particular type of investment is behaving which way, making an analysis, doing some research, tracking the fluctuations, tracking the changes which are happening in the market, and managing the whole portfolio. And of course, they do charge a good amount of fees for this service. So they are not providing you fund. That's why we call it as non-fund based. They are not providing you funds per se. Providing loan by a bank for car loan is a service where the fund is coming, right? That goes in the first category of financial services under the scope fund based. But here we are not providing funds as a intermediary. We are not providing you as a business fund. We are providing you service, and service is here to manage your portfolio, which has so many investments in the kitty, right? Then we have mergers and acquisitions. They are part of kind of merchant banking. It can be taken there, it can be taken independently as well. Merger and acquisition MA services, it takes into consideration valuers who are there. We have valuers who value the assets and liabilities of the company which is going to be merged, and also helps the acquiring companies to decide about the fair value of the assets and liabilities they have. The merging company, in the company which is intending to get merged, so business which is intending to get merged. So these are the services which are non-fund based, fee based, because to acquire a business which is running business, maybe sick business or a good business, healthy business, whatever. So merger and acquisition services are provided, including the valuation services are provided by the financial intermediaries basis on certain fees, and that is how they are falling under non-fund based financial services. Then we have capital restructuring. Capital restructuring refers to the composition of capital. So, the composition, primarily we have two components of capital, debt and equity, ownership funds and the debt funds. Now, within the debt we may have so many types of debts, be it bank loans, term loans, project loans, short term loans, commercial papers, etc., etc., right. And equity could be preference or a normal equity. So, if I, as a company, I want to go for restructuring, means I want to change the composition. So, let us say if the company has a requirement for 100 crore rupees, right. So, 100 crore could be funded by 100 completely by shareholders, the owners, equity holders, could be funded by composition of equity and preference equally, could be funded by 40% equity, 30% preference and last 30% by debt, and within the debt there are so many options, right. So, what is my current structure of capital and what do I want to achieve? For example, one of the very premier, the leading one, the leading business house of India, near to Corona, a few days before that, announced, it was 2019 I believe, or 18, announced that they want to go zero debt, they want to become a zero debt company. So, I do not want to name, it is a private, a huge big company, right, in fact the richest company in the country, and they announced they want to go zero debt. So, they may require help because they already have debts, they want to pay them off. To pay the debt off, they need to manage the funds, they need to ensure that there is no legal issue, because there could be some debt which was issued for a longer period, you want to get rid of it, you want to pay in before maturity, etc., etc. So, this is restructuring, and for that you need legal service, you need technical help, you need financial, all kind of help. That is what is a non-fund based financial service, fee based service. Debenture trusteeship. So, there are financial institutions which become trustees to issue debentures or bonds to the general public. Trusteeship is the undertaking that trustee takes, that they will protect the interest of debenture holders, they will have certain caveats, positive or negative. The caveats are affirmative or the other way, that there would be one director from the trustee institution, there would, they have, COVID could be in any frame, it all depends individual to individual business. But for example, the COVID could be that the working capital will never fall this, or the equity capital will never use for funding the working capital needs, or there will be no issue of new capital or new debt or new bonds until this period. So, any such kind of caveats could be there, but the trusteeship is basically a service which is extended by financial institutions to companies to help them issue debentures, bonds to the general public, acquire fund through that, right. So, it is a very, very common service, it is something which any company which is entitled to issue debentures, entitled to issue bonds, every company cannot, there are so many terms and conditions to be fulfilled by a company before it decides to go into the market with an issue of debentures, right. So, it means debenture issue or issuing of debenture or bonds is not a cup of tea for every company. They need to comply with certain guidelines, certain conditions which have been laid down by SEBI, by Institute of Corporate Affairs. They need to get the credit rating of their company. They need to show profits for a couple of previous years, few 3-4 years, and they need to show the credit worthiness to pay back the debenture amount, the loan amount basically. So, and for that, for completing this whole issue, the trustees are there and financial institutions are working as trustees, and this trusteeship service is one of the non-fund based, fee based financial service. Then we have custodial services. Custodials are, the custodian houses are there which perform the custodial services. Custodians, for example, we have national pension scheme, right? The funds are there with the government, and those funds are invested in many schemes, and there are houses in between, intermediaries who are known as custodians to manage that fund. For example, the trust is they are custodians individually. So custodians are custodial services means basically custodians, the individual or a group of people or a company or a bank or institution is there, which actually take care of the assets, financial assets. So it's a very risky service, which is for which very high price is charged, because custodial service is not given to everyone. There are not many providers for these services, only because there are terms and conditions. Everyone cannot become custodial. To become a custodial, to provide custodian services, the service provider has to prove its creditworthiness, has to meet certain terms and conditions, and then if providing the services, it is a very high risk, of course with high return service. Then the last thing I want to talk about is stockbroking. Stockbroking is becoming very common. There were times when the demat accounts were in 40 lakhs, so just not very past. It's a recent past only. Now we have surpassed. We have so many individuals who are directly participating in stock market. We have brokers who are registered with the SEBI and are participating in the stock market. So stock broking service is common, is becoming more popular by every passing day. In fact, it is becoming as a career option for those people who are from commerce or accounting background, who have interest in securities, who have interest in financial markets. So no one can actually work as a broker unless the person or the company is registered with the NSE, BSE and with the SEBI. So they are only registered brokers can work on this. But here the broking services means selling and buying for somebody, not for himself. So it means the brokers are not investing money. They are investing your money, and for that they are charging you fee. So it's a non-funds, very clearly, because no fund are coming from the brokers, right? Brokers are just helping you sell and buy efficiently, effectively, easily. So and basis on certain fees. So that's the stock broking service, right? So these are the 13 services which we have, which all of them are non-fund based services. I hope you were able to comprehend, were able to understand that these are the non-fund services, and in case you want to understand or know about the fund based services, please look at the previous part of this session. And now this is the time to wind up. Thank you very much, friends.